He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Well, we're back.
We're back.
Angry Mortgage, back. Natalie Butler, realtor extraordinaire. Ron Butler, old fat mortgage broker. And we're back. So, yeah. Natalie, you look dressed up today. What's going on?
A little overdone today. It's my brother's wedding day.
Oh, congratulations.
Yeah, Devin and Stacy. Congratulations to them. I know they listen religiously also.
Oh, wow. Okay, so they're getting married. Do they have a lot of kids or?
Just the one, my niece. Just the one. You've met my niece.
I met your niece. Yeah, I met your niece. Very good. Yeah, he's a good cute guy. This is the brother who wears the Smithville tuxedo, right?
Listen, he has an extensive wardrobe of suits, and he always buys 2 pairs of pants. One stay as pants, and the other he has tailored into shorts.
Yes.
Every single suit, I think he has 300 or so, are turned into shorts. So he can do either or.
The suit is shorts. Yeah.
Like it's the jacket with the shorts.
With the short matching.
Yeah, matching. So he always has 2 pairs of pants for one jacket.
Yeah, I recall.
Yeah.
Hey, he's a good guy, guy, great wife, great little kid, and congratulations, you're married. You know,
I'm fully ready. Shoot this, and then head up to the middle of nowhere in Fenwick and.
The people should know
Wainfleet, not Fenwick.
Natalie's family is basically from a part of Ontario. It's like the Appalachians in the States. Now, I'm not saying everybody's mother is his sister, but I mean, it's something going on there in that area.
It's a small town called Smithville. We have one stoplight, an LCBO, and a Tim Hortons.
You notice LCBO came immediately after the stoplight. The folks in Smithville are not afraid of having a drink. It's a great area. It's a great part of Ontario.
And you know what? We talk about it all the time with the increase in housing and whatnot. In Smithville, it's not cheap to live there anymore.
Oh my God, it should be.
It's
Holy
not.
Mackerel. Anyway, nothing against Smithville. We love all you folks. If you want to do a mortgage with us, we were just kidding. Kidding. Yeah, that's right.
Ron's had his night at Touchdown Willie's. Remember when I took you there?
Jesus. Jesus. Okay. Jesus. All right. Wow.
Anyways, yes. Happy wedding day to Devin and Stacy. Love you so much.
Okay, so people keep always wanting us to say what the date is, which makes no goddamn sense to me. Let me just scroll down the goddamn list of the podcasts and you'll find it. By the way, hey, hit the subscribe button, bitches. Okay, just do that. God damn it, don't listen and not subscribe. I mean, that's all wrong. So it's like the first week of August.
Yeah,
okay? That's what it is. First week of August.
Was it the 6th today? 5th?
Yeah, 5th? but we tape on the weekend and then it airs on a Tuesday, so it's going to be the second week of August. Mm-hmm. But it's time to start thinking about the rest of the year, you know, because the year we're past the halfway point, right? It's halfway gone. All right. So what happened last week? Well, once again, rates go up. Maybe we just say it every goddamn week. Fixed rates go up. They just go up, and they don't go up a lot. Like they don't go up like 20% or anything, but they just tiny incremental increases every week.
It's like paper cutting us to death.
Exactly. It's just like death by 1,000 cuts. Okay. Yep. It's just every week it's a little higher. Okay. So that happened. That happened last week.
Oh, it did.
Just true as hell. You know, a lot of rates in the 6s now. You know, a lot of rates in the 6s. So if you have to qualify to get a mortgage in the 8s, and holy mackerel, that's an exercise.
Yeah, it's getting rough.
So what is the future of all this? You know, it's hard to say. By the way, I hate prediction because like I'm so wrong for so long. Like I tend to be wrong about every prediction.
Broken clock is right twice a day.
Yeah, twice a day. Yeah, exactly. Twice a day, the broken clock is wrong. It's right. Is right. It's wrong for a lot of the day. Okay. And you know what? If you make the same prediction for like 20 years, like by accident, some shit happens that you were right. Okay. Yeah. Like, I mean, like, but as like a smart guy said the other day, if you are way, way off on timing, you're wrong. Mm-hmm. That's it. You're just wrong. Like you can't, if you say something and it takes 2 years to happen, it was just a guess, dude. Okay. Yeah. That's it. So, but the future, well, there was I got a tip this week, that the bank regulator, OSFI, the Office of the Superintendent of Financial Institutions. So what do they do anyway? Like, I mean, you know, they don't. People sometimes I throw these acronyms around and I throw these things that these operations do, and not everybody. I don't like. What does it mean to people? Okay, so if you're a federally licensed bank, mm-hmm. like which is all the big banks. Okay, and the big banks do 86% of all the business in Canada, really. I mean, they touch it. Like, they touch it in some way. They might not, like, you might see a name on something that, okay, this is XYZ company is giving them a mortgage, but really the money did come from a bank at some point.
Well, it's like I don't know, are we going to drop names here? Like this Simply is a part of CIBC or the
Tangerine, yeah.
Tangerine,
yeah, exactly.
And that. It's all part of, yeah.
That's an excellent point. Even some of the banks that you think are banks, they're just divisions of other banks.
Yeah.
Okay. So yeah, that's an excellent point. So the big banks are regulated by this organization, OSFI, and they also regulate all the mortgage insurers. So there's 3 mortgage insurers in Canada. The most famous one is like CMHC. Mm-hmm. We all know that. They've been around since the 1950s. And basically their function, I'll just sort of quickly summarize it, make it oversimplified. But if you want to get a mortgage on a property that's less than $1 million, you want to buy a house for less than $1 million, mm-hmm. and you want to put less than 20% down, you have to get mortgage insurance. Now, mortgage insurance isn't about you. It's about whether you pay.
Yeah, they're not helping you whatsoever. They're just going to make sure the bank gets paid.
Well, they're sort of helping you. They get you access to 2 things. They give you access to a low down payment, and they give you access to the best rate. Okay.
Sure, but in this day and age, you go buy something for under $1 million, telling me what you end up in. You know,
Ontario and British Columbia, pretty damn hard. I mean, but it's still out there, and there's other parts of Canada where it's meaningful.
Oh, okay? Sure.
Wow. Absolutely. It's meaningful. But so those are mortgage insurers. There's also Sagen, okay, mm-hmm. which and there's another company called Canada Guarantee, and which do somewhat the same thing, almost similar, very similar things. Now, what CMHC does is they charge a big insurance premium. So you want to buy a house for $900,000, you only want to put down $90,000, you got to pay a big insurance premium. It's like in the 30,000s. Now, it's attached to the mortgage. So in other words, the bank lends you the insurance premium. Okay. So if you think your mortgage was going to be $810, it's really $846 because
depending on the
insurance premium. Yeah. So what does this insurance do? Insurance, what it does is if you don't pay, you quit paying your mortgage, you lose your job or all hell breaks loose or whatever. And bless you.
Sorry, excuse me.
So you can't pay the mortgage. Mm-hmm. And eventually the bank has to take the house away from you and sell it to get their money back. Yeah. But this insurance guarantees them that they don't have to worry. They might not even have to sell it. CMHC or Sagen or CG may sell it. Okay, Canada Guarantee may sell it. So it just protects the banks totally from anything going wrong with that debt, okay, with that mortgage debt. And it's expensive, as it should be. It's very low utilization, like they have very few claims, even though they have huge claims reserve. And it's designed to allow Canadians to buy a home with less than 20% down. So it gives, but unfortunately what's happening in Canada is the prices of homes in so many places has come so high that it's just hard to afford the payments, particularly with these high interest rates we have today. Sure. High-ish.
Even if you're buying at $950 at 6%, that's a pretty penny.
Oh, and you're qualifying at in the 8s. Yeah. You know, so it's hard. But these 3 companies are also under direction, or I shouldn't say direction, but under the regulation of OSFI, okay, these three mortgage insurers. And that means that basically every kind of mortgage organization is touched by it. Like there's provincially licensed people who do mortgages, like credit unions, okay, all across Canada. There's credit unions everywhere. And they do mortgages, and they are not bound by any of these OSFI regulations, but they end up having to follow them because if they want to do these low down payment mortgages, they only got one place to go, right? So they can't go anywhere else. Yeah. Right? They have to do so.
Well, they have three places to go.
But. Well, they got three places to go, but they can't do it. It's totally against the rules for anybody to do a purchase with less than 20% down
without the insurance.
I mean, you just get shut down.
Yeah.
Okay. It's just
well, and it doesn't make sense for the financial institutions either, because if you say it's only 5% down, there's only really 5% of equity in that home. If the market stays the same, if we see another drop, now there's nothing. They need that insurance.
Absolutely. That is
there is the default, right?
100%. That is exactly the way to look at it. You couldn't possibly expect a rational financial institution to do 5% down mortgages
without the insurance. You couldn't.
That's it.
Couldn't.
It's necessary. Now, sometimes people say, yeah, eventually they're all going to go broke. They're going to go, CMHC are going to go broke. And, there's going to be big housing crash. CMHC are going to go broke and the taxpayers are going to have to bail them out. Okay. Let's address that quickly. That's possible. It's possible. It's really, really, really fucking unlikely. Okay. But it's possible. But, and the thing people don't understand is they have massive billions and billions and billions of reserves because they're an insurance company. You have to have reserves. Okay. To cover the possibility that there might be a jump in claims. There has not been a jump in claims. And let me give you the final key thing to understand. The taxpayer has never given 1 cent of money to CMHC for the whole 75 years it's been in existence. Not a penny.
No.
And here's the other deal. Because it's a crown corporation, it's given money back to the taxpayer. Like it shows a profit, it gives money back to the taxpayer. So if you're trying to say, oh, it's a big scam, it's a big Ponzi, it's all going to be bad, it's going to go. First of all, nothing's ever gone wrong. When the whole U.S. mortgage system effectively collapsed in 2008, okay, they had to bail out their organizations that supported low down payment. They had to bail them out completely, cost billions, billions, and billions, okay? We've only made money from this thing as taxpayers. So like everybody, I guess there's always the crackpots out there who want to say, I think it's still going to happen. Well, you can think whatever the fuck you want, but it's probably not going to happen. Okay.
Crazy people just waiting for the world to burn. Why?
Hey, you know what? Speaking of that, this is a great one. So I'm listening to a podcast and the guys in the podcast, they said, well, all this smoke from this forest fires is coming from Canada. It's not really smoke from Canada. It's not from forest fire. It smells like chemicals. I think it's the government running an experiment on us with chemicals. It's not really forest fires in Canada.
There's people that think that when the planes go by and you see the stripes in the sky, that's chemicals also.
Well, the orange stripes, yeah, for the water bombers, okay. Oh yeah, but this one was wild. This was like a sort of a. He's really trying to get his point across. Yeah, no, I know how trees smell, and that's not how it smells when they burn. This is not it. This is definitely chemicals.
Sir, it's not just trees. There are other stuff burning.
Well, I mean,
houses.
I'm. There's the fires are there. Yeah. Okay, it's not like the conspiracy theory that nobody ever really landed on the moon. Okay, okay, well, no, I think all those videos of the fire is fake. I mean, oh my God, people have died. Firefighters have died. I mean, but this is where we're at as a society. That people want to argue the shit out of something that makes no sense. Okay, it just makes no sense at all, and that makes no sense for hundreds or thousands of people. Maybe it's a smaller group than thousands, but it may be thousands who think that, CMHC is going to go broke. Taxpayers are going to have to bail it out. It's just another disaster. We need to shut down CMHC. No, we don't want to shut down CMHC. Stupid, stupid, stupid. Okay? It's the best system in the world to help people buy a home. Nobody comes close. No country has ever achieved something that you help people buy a home and the money goes back to the taxpayer. Like there's profit to the taxpayer. Nobody's ever done that before. No place in the world does it. This is the best system. So all you people who want to say, well, we need to shut it down, shut the fuck up, okay? It's a good system, and you're wrong. All of you are wrong. Go to hell. Okay. Everybody says, shut it down, go to hell. Okay. That's it. It's a great system. Now, that's who we go back to the bank regulator, OSFI, who regulates these insurers as well. Mm-hmm. So I got a tip that in October, they've been studying changes to mortgage rules, studying changes to mortgage guidelines for months now. They announced it at the beginning of this year. Okay. Going to do a big study, going to get advice from all they call them stakeholders. Okay. I always think about, what is that? It's like a bunch of people getting ready to destroy vampires in their coffin, like you're a stakeholder.
No, those are stake wielders.
Stake wielders. Okay, but these are stakeholders. Anyway, these are, so talking to all the stakeholders, which basically means we're talking to the banks and talking to other people in government, because people in government love to talk to people in government and talk to people in universities. Like, we'd like to talk to a lot of professors about this. Like, most of these professors have never had they don't have a fucking mortgage. Okay, why are you talking to professors? Like, who gives a shit about professors? I know two good ones, maybe one, Mike Moffat, he's good. Everybody else, no fucking good. Okay. Like, quit talking to professors. Talk to people who actually do the work. Hey, government. Yeah. All you government people, quit talking to just professors and other people in government. Go and talk to people who actually do the work. People in the trenches. Start asking real questions. Yeah. Professors, F yourselves. Okay. Except that one guy, Mike Moffat. He's good.
What does he teach?
Yeah.
That he's so good.
Well, he makes sense. Oh, okay. He's a housing commentator as well, and everything he says makes sense. Okay. It makes a ton of sense. Okay. Yeah. He was the first guy, really a crusader, who said, can somebody please explain to me how universities can increase the enrollment of foreign students, like 250%, okay? Mm-hmm. How can universities increase the enrollment of foreign students and not build one dorm for them?
Yeah, that's crazy.
What the fuck? That's stupid.
I primarily work in a university town. Yeah. And I'll tell you, these student houses, some of them are bad.
It's bad. It's all bad. And but the real question has to be, how do you get away with it? Like, how do you say, we're going to send people overseas to recruit students from other countries who want you to come here for 4 years, get your degree, and we want all of you to come. Everybody come. Okay. Okay. You're here now. Great. Good luck fucking finding a place to live. I mean, it's a cold country, but man, you're on your own. Okay.
I went into one house and they said it was an 8-bedroom student house.
Ooh, Jesus.
So it was very totally illegal. Like, this is not allowed, but the city turns a blind eye.
Yeah.
You go down to the basement.
Mm-hmm.
So there was 3 normal bedrooms upstairs. It was a bungalow. Okay.
It's a bungalow?
Yeah. Go downstairs and there's just curtains up, and that's what they were calling bedrooms.
Curtain and futon.
Curtains and like small little blow-up mattresses or like single mattresses, this and that, and just little Asian girls working on their computers. It was the strangest situation I've ever been in, with like a hot plate.
That's illegal too.
Well, yeah, with like just a little hot plate. That's what they were cooking on, or a microwave. Like, that's not student housing.
Jesus.
It was the most insane thing. I thought I was walking into a horror movie, and they seemed fine. Like, they didn't seem abused or anything. Let's put that across.
All right.
But it was sad. Like, you're coming to this country to get the education that you want, and there's absolutely nowhere for you to live. There's only a certain amount of dorms.
Oh, God.
Dorms get significantly waitlisted. And not only that, they're expensive. Do you know how much a dorm is at Mac?
No.
It's insane.
No.
It's actually crazy.
Jesus. Okay. So, but anyway, props to Mike Moffat. Yeah. He works for the university himself, amongst other things. And he called them out and he said, listen, how can you make a project of bringing in record numbers and then beat the record every year? Bring in more and more and more since COVID. Bring in the most you possibly can. And by the way, we're not going to care one shit about their housing. Not a damn. We don't care. You can just live in the street. We don't give a shit. Okay. But just pay your tuition.
Yeah.
Like, God damn, that's wrong. Anyway. So the regulator is been discussing everything with these stakeholders, not stake wielders, and no vampires involved. And the outcome is going to show up in October. I got a tip coming in October. All right. So what does it mean? What will happen when the bank regulator brings in some new mortgage guidelines? First of all, the day it happens, nothing will happen because they give a bunch of time for it to start.
Adjust,
Yeah, because it's crazy. Like, banks need time. They need time to do everything. They have massive legacy IT systems, processing systems. They need time to make adjustments.
Do you remember the rush right before they brought in the stress test?
Oh, yeah.
The rush to get everyone into a mortgage before the stress test.
It was a boom. Intense. It was a boom, right?
That was intense.
It was intense. So we'll have the same thing again because let's face it, the rules are not going to get easier. They're going to get tighter.
Yeah.
It's going to be, first of all, going to be a lot harder to, this is a prediction, but I don't think it's wrong because it's already happening, actually. It's gradually happening. It's going to get harder to buy a rental property. That's it. Yeah. It's just one of the main features. It's just going to get tougher. You're going to, from a bank. I mean, you buy a rental property for cash. Who cares? Okay. Yeah. But you want a mortgage on a rental property, it's going to get tougher and tougher. And it's going to drive people to alternative lending if they want to do it. That's a topic for a whole other show. And what else is going to happen? They want to tamp down on HELOCs. So what's a HELOC? HELOC's a home equity line of credit. That's a line of credit. A lot of people have personal lines of credit, but you can have a line of credit that's attached to your house.
Yes.
It's a low interest rate. It's prime plus a half, or it's just prime. It's anywhere between just prime and prime plus a half. Prime today, 7.2. 7.25. Yeah, 2.5. Yeah. Or 7.2. Which is it? 7.2.
Yeah.
Yeah, 7.2. Okay. Are we all screwed up in this? Anyway.
I know. We're backwards.
But it's in the 7s and it used to be 2.95 for years. Okay. Yeah. 2 years or so. But that gives you access to a line of credit. You take money out, you pay a minimum payment, which is just the interest on the line of credit. And you can pay it all off anytime you want. You pay it off. Okay.
You have that flexibility, and you're only charged the interest on the principal that's used.
Or you can pay more. Yeah, it's the interest on whatever you use, and you pay it to zero. You pay nothing. Okay. And your payments are flexible. You can just pay the minimum, which is the interest per month, or you can pay as much as you want.
And they are easier to get if you are a homeowner. They're easier to get than a personal line of credit.
Oh, sometimes personal line of credit, they hand them out like popcorn, but I mean...
Not anything substantial.
No, not substantial. So you could have big lines of credit. You could have like $250,000, $500,000 line of credit if you got a great big house with lots of equity. Yeah. So that's a HELOC. So they're going to make HELOCs harder to get. So why? Why are they doing this? All right. Because they just feel that HELOCs are a mystery. They're opaque. What do I mean by that? So... when you get a mortgage, and every mortgage is reported to various authorities, they accumulate the information so they know where Canadians are at. They say, well, you got a mortgage. This is the mortgage. This is the rate. This is the size of the mortgage. And this is how soon it's going to be paid off. This is how quick it's being paid down, because you pay principal every time you make a payment with a mortgage. You pay interest and principal. Your mortgage is getting smaller if you have a mortgage, theoretically. We go to another show about how that didn't quite work out. But so the bank regulator understands that. It's easy to understand, okay? This is the mortgage. It's going to get smaller every year. This is what's on the books. With a HELOC, you don't know.
Oh, it's up and down. It can be fully utilized or sit at zero for years, and then all of a sudden it's racked right up.
Yeah, and you don't know. And this rapid rise in rates we've had means that we don't know what exposure it is. Like you could have taken out a lot of money, and then because it's instant, right? Every time the Bank of Canada raises, your cost of your HELOC goes up. Yep. So it's instantaneous. It's more than doubled. Some people might be getting towards triple, and the bank regulator recognizes that's not a great thing.
Well, yeah, because even those minimum payments get harder for people to pay.
100%. Yeah.
Never mind paying off principal of it.
So the regulator wants to see HELOCs curtailed, not eliminated. No, nobody's going to lose their HELOC. And just so there's not a million comments, listen carefully, okay? They're not going to take your HELOC away from you, okay? Then all of a sudden one day you're not going to wake up and HELOCs are banned, that it's gone. That's not what's going to happen. I mean, what's going to happen is ability to get a new one or a bigger one is going to be curtailed. And it's going to be harder to do in future.
And don't they have the right to do that anytime they want anyways? If you're sitting at 200 and they're like, well, you're not using this, we bumped you down to 100.
Or we bump you to zero. Yeah. Because people need to know HELOC, any line of credit, HELOC, personal line, whatever line of credit, it's a demand loan.
Yeah.
The bank can do whatever they want, whenever they want, and that's it. It's a contract that only goes towards the bank.
Yeah.
Okay. So if the bank can shut you down and you say, well, you got no more access to a HELOC. We're taking it all away, and we're going to set a new set of payments for you. We don't like this minimum payment you're making, so we're going to say that you can never access the HELOC again, and you're going to have to increase your payment so it's gone in 5 years, okay? Yeah. They can do anything they want. It's a demand loan, all right? But that's the future. The future is going to be harder to get a rental mortgage on a rental. There's going to be less access to HELOCs. And there's going to be a more careful thought process about the relationship between maximum lending on a mortgage.
Like tightening up the ratios?
Well, not really. They're kind of okay with the ratios, but what they're worried about is all the stuff on the side. Okay, so let's say that you've got a mortgage. You got 2 houses. You got a house and a cottage, and you got mortgages on both of them. And the mortgage on the cottage is variable. The regulator is saying, we really got to think about that mortgage on the cottage like it could go a lot higher. A lot higher. So they already do, but they don't actually do that calculation now. They're going to do things like saying, if you have access to money on a personal line of credit, or you may have a HELOC on that cottage, or you may have big limits on your credit cards. We want to try to think about you maxing out all those cards. We want to, what the regulator is saying is, we believe we need to think harder about what happens if you use all the credit you have available to you. Everything. Yeah. And
because when you applied, it was all at zero, but it's a whole different story if everything's maxed out.
Yeah, exactly. Yeah. And this is not something we ever did before. Because in the mortgage business, you would assign a higher payment than the minimum payment on things when you did the calculation of debt servicing. For a new mortgage, you'd figure out, well, your payment could be higher, okay? But we never said, sometimes in limited ways, but we never actually looked at your credit card limit and said, we're going to pretend you went max and we're pretend your payment's going to be 3%. We never did that, okay? So these are some of the changes on the horizon. So debt ratio is not necessarily changing, but the way of thinking about it may change. Yeah, debt servicing may change, yeah.
Which makes a lot of sense, though.
Well,
yeah. What's the first thing to go up when you say you got a variable rate mortgage, your payment's just gone up, things are tighter? What's the first thing to go up when you're getting tighter for other payments? You start using the credit cards more.
Or you use a personal line of credit, whatever.
Everything goes up more.
That's right, yeah.
Now, everything's fully utilized. You still have to make your payments on that, plus your mortgage payments more. This is where we're going to see people starting to get into trouble. Yeah,
and that's what the regulator's thinking. Yeah.
I think it's smart.
It's smart but it may not be smart if you. Well, put it this way: the bank regulator is there to protect the banking system. That's why they're there. They if you talk to them, ultimately, if you talk to the guy who runs it, Peter Rutledge, at the end of the day, sooner or later, he comes to the point of saying, "Well, I can't care about the consumer. I can't care about the borrower. I can't care about the public. I can only care about the integrity of the banking system. I only got one job. Okay, that's it. I care about the integrity of the banking system."
In a roundabout way, it does help people, though. It kind of saves them from themselves.
Oh yeah. I'll never argue those points at all. And
because we all got pissed at the stress test, but when did the stress test come in?
2016.
16.
Yep.
Sitting in 2023. Aren't we a little bit glad that we have it?
Well, that's Rutledge says all the time. Yeah, I was the smartest thing anybody ever did. So we were right. Everybody else was wrong.
All mad.
And
the realtors are mad. Mortgage brokers
everybody's mad.
Made everybody a lot harder for everybody to get something. But now sitting where we are now, are we not happy about it?
Sure. And he was right. Everybody put in the stress test was right. They were absolutely right. It was the right thing to do. And cutting back on this credit is probably the right thing to do. Okay. But let's be aware of one thing. This is the important part. Well, the other part is important too. Yeah, we should protect the public from themselves from overutilization of credit.
Yeah.
But the other thing to worry about is if we're continuing, if mortgages are much more expensive, and then we're going to make mortgages harder to get, and the price of houses is batshit crazy, are we not continuing to eliminate average income people from being able to buy a house?
Oh, 110%. And that's where it sucks, is that's who it affects.
Yeah.
And I don't know the answer to that.
No.
If I did know the answer, I wouldn't be here.
not on your brother's wedding day. Yeah, you'd be headed down to where is it? Like it's the end of the world. Wayne Fleet. Okay, all right. So that's what's coming. October, we'll be seeing the new guidelines, and then there'll be a time for them to be put into effect. And as you wisely said, there'll probably be a big rush to get in under the deadline again.
Oh, 100%.
Yeah, but I don't know how rushed you can get with 8% qualifying rate. Like, I don't know how successful that's going to be. All right. So the future, that's some of the future about regulation. So, for the future, people always say, well, when are the rates going to come down? When are the rates going to come down? When are the rates going to come down?
18 months to 2 years, I say.
And that is probably true for, there's two issues here. Is there going to be a real ball-busting recession where there's going to be massive unemployment? That gives the Bank of Canada the ability to drop the rate sooner, for sure. Okay.
Who was it just announced that they're cutting
TELUS, 6,000,
6,000 jobs.
Jobs report.
I love the people on Twitter.
People on Twitter, yeah, Jesus.
No, but I don't see the point. So TELUS about to cut 6,000 jobs, and then you have Joe Blow underneath with his comment. He had to take this time out of his day to make this comment because it's so insightful. He just said, no.
No. Like, no layoff?
That was it.
Was it? No.
No.
Okay.
Oh, my apologies, sir. We will not do that.
Stop laying them off. Stop it. Okay.
No, not even stop. Just no.
No, just no. Twitter's its own thing.
It is.
All right. So what will happen is, in the face of a severe recession, the Bank of Canada will cut rates faster. Okay?
That is, I think, the first scary announcement we've had. Have we had any other scary ones?
No, we actually had a jobs report in Canada that was actually negative for the first time in years.
Really?
A couple of years. Yeah, it went negative. It was expected to be about 21,000 new jobs, and it was actually negative 6,800. So that was not just TELUS. I mean, that's and we got to see. We just got to watch. I mean, but if we're talking about the future of rates, a hellacious bad recession causes the Bank of Canada to drop because inflation basically evaporates in a bad recession. Just evaporates because nobody can buy anything.
It's a double-edged sword. You want the rates to go down, but you don't want to go through the pain to make them go down because that's the only thing that's going to make them come down is everybody in pain.
Remember, it's never really everybody. This is the key. It's never
just
really
the normal working class people.
So, and particularly people who don't work for the government.
Well, yeah, no shit.
They don't work for the government. They're okay. Particularly, and some of them, I'm glad they're okay. I don't want to see any layoffs of nurses or, healthcare professionals or anything like that. We need our teachers. There's, teachers got to teach.
Yeah.
I'm not endorsing the idea that there should be a lot less government employees. Maybe a couple less, but maybe the guys at CRA, there could be less. You could be far fewer at you at CRA. Okay.
I was going to make a Sophie Trudeau joke, but I won't.
No, we're not doing any Sophie Trudeau jokes. No. I posted on that. I don't want any jokes about Sophie Trudeau. Leave the wife and the kids alone. You can say whatever the hell you want about Justin. He's a public figure, but it's a private thing. So anyway, the rates could come down sooner than we think. So how to really flesh it out? If there is a really, really bad recession, the rates will come down sooner. The Bank of Canada will drop rates sooner. And here's the interesting point. Just like fixed rates went up way before the variable rates went up 2 years ago, it's nearly 2 years ago now, the fixed rates will come down before the variable rate will. Like the people who run the bond trading desks will realize, economy's headed for the crapper. We're going to
put them down. Yeah.
We're going to put them down. Okay, that's just the way it works. Now, it's tough because there's a lot more going on in the world today than ever before. Like one of the reasons our rates went up last week is the Bank of Japan, believe it or not. Like, how the hell did that happen, you might say? But yeah, that actually happened. Bank of Japan, for the first time in 34 years, said we're going to allow our bonds to be priced upwards, that our prime rate's going to go up.
Wow.
And it shook the world. I mean, it's because something's been the same for 32 years, suddenly changes. It's going to have ripples everywhere. But here's the thing. Someday rates will go down. Like, we just have to accept that. I mean, these rates, everybody says, by the way, that's another thing about Twitter. Everybody says, no, I think it's going to 10. I think the Bank of Canada is going to 10%. Shut the fuck up. Okay, it's not going to 10%. The whole world system breaks down at 10%. That's crazy. And some people on Twitter take joy in high rates. They say, yeah, all you speculators and housing flippers, fuck you all. What do you lose your shirt? Okay, calm down. I mean, like,
why do you want to watch the world burn?
Well, because you're mad at some people. It's like a thin,
it's not going to help
small number of people.
It's not the rates. Everyone losing their house that they worked hard to buy is not going to help you get out of your fucking mom's basement.
And not only,
it's not. You're still going to be in your mom's basement.
Most important. House flippers and speculators are a tiny, tiny percentage of people owning homes.
No.
Okay, very small.
Why are you wishing that on the families and the kids
you want to know what that one is?
People, Jesus.
Thank you for saying that, because you want to know why they're mad at average people. Yeah, you were dumb. You should have taken a fixed. Okay, like Jesus H Christ. Now let me explain that one. Another, actually, podcast viewer, podcast listener was a viewer listener. It's YouTube. Both. Anyway, I got a comment. It was a smart comment. A guy wrote in and said, "Hey, we should think about this for a minute. When you wanted to buy a house in 2021." Mm-hmm. We had a stress test then, right? I mean, It's 2% stress test. So you had to find a way to qualify to get the mortgage you wanted, with batshit crazy house prices in most of Canada. You had to take a variable because the variable produced the lowest qualification rate. Because just to explain, all through 2021, the stress test maxed out or effectively on a variable, which was low at the time. The stress test maxed out at 5.25. Okay. Now, when rates went into the fours, when fixed rates went into the fours, plus 2% stress test, you were qualifying in the sixes, right? Mm-hmm. So people said, well, to get the house I want, to get the mortgage I want, to get the house I want, I got to stick to variable. I don't even want variable. I never had variable before. I got to take it to qualify because their realtor told them that, the mortgage guys told them that, everybody told them that. Is if you want to qualify, the only way you can qualify is with a variable. So let's be honest. That's a regulator by accident. They didn't plan on it, but that's a regulator and a banking system and a governmental system that actually encouraged people to take variable in order to get a house. Okay. Now,
how could you not at one point when it was 1.99? Sorry.
But of course, there's also,
how could you not?
There's also a lot of people, and this is a thing that's unfolding in the States too. There's also a lot of people who like to sort of do like this, either open brag or humble brag that they're smarter than everybody else. Okay. Yeah. So in the States right now, there's a bunch of people who locked in their mortgages at a rate that's around between 2.6 and 2.99. Okay. That was available back in 2021. Okay. Tons of people took it because in the States, you don't pay a penalty to break a mortgage. So if you see a lower interest rate, you just grab it.
Yeah.
Okay. Just refinance it and grab it. Okay. So there's tons of people took it. And there's now people who have, that was 299, maybe it was 269, whatever it was. And now everybody's at like 699 and 709. So sometimes people are having like a barbecue in the States. I was reading this article. I was reading it. The guy sent it to me. I did read it. Reading an article. The guys, a cocktail party, barbecue, whatever. Oh, yes. We just bought a new house. So immediately everybody in the room knows if you bought a new house, you got the high rate, right? Today you bought the house. So you're in the sixes. You got a rate that's in the sixes.
Yeah.
Maybe 7. Okay. And then then all of a sudden the conversation switches to, oh, congratulations on the house. Great to hear that. Did you find the rates were pretty high? Oh, yeah, the rates were pretty high. Yeah, I know. The rates were high. Oh, yeah. It's interesting, but I have a 2.69 rate. I don't mind. I was just lucky. No brag. I was just lucky. I wasn't that smart. I was just lucky. But I got 2.69. Motherfuckers, okay? That's what we got now. We got a bunch of people who got fixed rates in 2020, 2021. Fixed rates were crazy low. We did a lot of 1.89. We did some ridiculously low rates compared with today, compared with history.
Yeah.
Compared with the history of Canada, they were super low rates. It was crazy low, 5-year fixed. 169, 159, 189, 209, crazy low. And those people, they're doing a little bragging these days, but they're also worried. They're also a bit worried.
These people that are getting worried because now renewal's coming up.
Renewal's coming up, but in the next 2, because here's the funny part. Some people are really like, and again, it's a little bit of Yeah, I know. I knew the rates were going to go up. No, you didn't. Jesus. But yes, you took fix, and God bless you. Okay. Yeah. It's a good idea. You did the right thing. It was perfect. But don't say you knew the rates were going up. Like the whole, like in 2020, nobody dreamt that there would be crazy inflation. Nobody. Like, you can maybe find one economist out of 100 who said, this high indebtedness and breakdown of supply chains may cause inflation. Maybe one nerdy guy said that, or nerdy gal said that, but nobody said for sure, we think inflation is going crazy like we haven't seen it for 30 years. Yeah, nobody said that. Okay. Yeah. So the people who, and again, government policy, if you want to afford to get a mortgage, you're sort of forced into that. Well, now here, we actually have a moment in time right now when sort of the opposite is happening. Now, not a lot of people are buying new homes right now. It's slowed down quite a bit since June. But if you want to get the lowest rate, you have to take a 5-year fixed. That's the lowest rate. That's the lowest qualification level. Yeah. Okay. And no, you really should be taking a 2-year or a 3-year.
Try to see what happens.
Because, eventually rates will come down. I don't believe we're going to see 1.69 rates again.
Ever.
I've said that a lot. Well, maybe you're young. I'm younger than me.
Not that young.
I'm like half dead. But the reality is that I won't see it. But we'll see rates in the 4s. I mean, we will see rates in the 4s.
I think we can maybe hope for one day see them in the 3s again.
Maybe high ratio. Maybe CMHC mortgage in the 3s. Yeah. But we will see it in the 4s someday, whether it's next year or the following year. We'll see some rates in the 4s. So if you're stuck in a 5 at 5.69, and you could see that you could get it for 4.29, but you can't because the break penalty is too high, et cetera, et cetera. Really, this is another weird policy thing, that if you want to buy a home today, the lowest qualification rate is a 5-year fixed. But in reality, you should be taking a 2-year or 3-year tops.
Which is higher, but harder to qualify.
Well, then it makes it harder to qualify. So again, we have strange turn of events that is sort of pushed by government policy that is making it motivates Canadians who want to buy a house to take the wrong product. So happened before, happening again. All right, so that's the crazy part. So when will this happen? All right, so will rates fall next year? And here's one of the really interesting things that I read last week is that when they fall, they're going to fall slowly. Like we had one.
They're not going to plummet.
No, they're not going to plummet. Okay. We saw, even if it's a bad recession, no plummet. Okay. We saw the Bank of Canada raise interest rates 1% at one point.
That was huge.
Like a ball buster. Like, oh God, look at that. Okay. Yeah. I mean, they're going to come down slow. They're going to come like a quarter at a time, maybe 2 meetings in a row, a quarter, then a little pause, then another quarter. So I read a good article. The consensus opinion of bank economists was that by the end of when the bank starts cutting, maybe next year, who knows when, but they'll go down to a point where by 2025, prime might just be 3.5, 3.25, 3.75. Okay. But that's a Bank of Canada prime at that level. That's a commercial bank prime that's in the 5s. Mm-hmm. It's all in the 5s. Okay. That's fixed rates that are in the mid to high 4s. Okay. And that's a variable rate that's like in the 4s as well. Okay. So within the next 2 years, there's probably going to be some relief on rates, but not much. Okay. Like, and to your point, you made a great point.
We're not getting stitches. We're getting a Band-Aid.
Yeah, exactly.
Yeah.
And you made the great point. All these people who are really, getting a little bit worried, that it's 2 years away for their renewal, that it's a year and a half away for their renewal, that it's 2.5 years away from their renewal.
You might have hit it at the good spot before, but you might be coming in just the wrong time.
Well, even if the rates come off, this is the interesting part to me. Even if the rates come off, if you had a 1.89 rate in 2021, and in 2026, the best rate was still 4.39, that's still a double.
That's huge.
That's still a double. So, hey, all those people who maybe no humble brag, but in their heart, they were thinking, oh, I was smart to take a fixed.
It'll hit you sooner than later.
Eventually, everybody's in the same boat. In Canada, we don't have 30-year mortgages in Canada. We don't have 25-year mortgages in Canada. In the States,
what's the max we can do? 10?
Well, you can.
I think is outrageous.
I think there's a 15, but nobody takes it.
It's outrageously high.
Well, that's not outrageous, but it's like 1% high. So how are you going to qualify for anything in the 10% range, right? Yeah. I mean, my God, it's hard to wrap your head around. I'm going to qualify in the 9s. Good luck. So not much utilization. No. In the States, they only ever really the most popular term has always been a 30-year mortgage. Mm-hmm. So 30-year amortization and the same rate for 30 years. Okay.
Wow.
And that's, one of the, we don't have that here. Eventually, everybody's going to be in the same boat. Eventually, everybody will probably have a rate that starts with a 4.
Yeah.
Okay. And that's a big difference. And what's that do? It means that more and more reason to really think about these batshit crazy house prices. Because because it wasn't as bad a thing when rates were 2%.
They're coming down.
I think they're gonna come down.
It's already started.
I again, there's no prediction on house prices because there's nobody as wrong as Ron Butler. I was right last year. I said they'd come down, and I said they'd come down when the rates went really high. I said the prices would, and they did come down. And then when rates came off a little bit in March and April and February of this year, prices jumped back up again, 10%, 12%, 15%. I think they're on their way back down again. I think we'll revisit those lows that we had in 2022, and we might even find new lows. Okay, but it's regional. I don't think the prices in Brandon, Manitoba, are going to plummet.
No.
Okay. In fact, I think somebody was telling me the other day that the prices are starting to go up in Saskatoon and Regina because the rental properties are so inexpensive there. You can actually make money on a rental property. But
there's a lot of people that are permanently working remote that are moving.
Yep, they're moving. And Calgary is booming, has been booming. But that's the future. So for this week, I want to reach out to, one of our favorite segment. I'm going to be brief. It's time for
What the Actual Fuck?
What the actual fuck is with these people on social media? Like, what the actual fuck is it? Immediately,
the keyboard warriors.
But it's just so crazy. Okay, like about I put up a post. I said, we shouldn't be attacking the Trudeau family because those kids and that wife really have nothing to do with it. Like, I had multiple responses. No, we should be mad as fuck at them. I said, no, what is wrong with you?
Right.
Okay. Oh no, that's Sophie woman. I got to tell you 100 reasons why she's bad. Wait a minute, she's not even a public person. Really, she's not going to be a public person. What is going on here?
The only thing I laughed at was, why can Sophie leave Justin, but we can't?
Oh, well, that's not so bad. That's not bad.
That was
that's not
funny.
bad. But I've seen the crazy. Like, somebody put up. I mean, people are going to say, "Well, why are you talking about it? Just shut up about it if you don't think people should talk about it." Like, I just got to use it as an example of insanity. Okay, immediately a meme went up of Sophie holding hands, walking past the paparazzi, holding hands with Pete Davidson. Okay,
Pete
Jesus.
Davidson marries.
I know. But hold on. Why are we doing that? We don't need to be
you missed the whole Kim and Kanye thing?
Oh God,
I didn't
almighty.
make you watch that.
Oh no, please! I don't want to know about that. But one thing about social media, please, you don't have to be so goddamn angry about everything. The fact it's anonymous makes people act like lunatics.
Keyboard warriors. Hiding behind the screen.
Oh, but why are you so mad about everything? Okay.
Well, we do run a podcast called Angry Mortgage. So.
But
why are you so mad?
I can be mad at mortgages. I mean, after 29 years, I get to be mad at some mortgages. Okay, but the people are mad about everything. Like people turning the forest fire into a conspiracy. I mean, holy shit! People wanting to go to they lose their minds on, and some of the things people post about immigration is sick. It is racist, crazy sick.
Yeah,
okay?
that gets crazy.
So what the actual fuck, people? Social media, I don't want you to be perfect, but just take it down a couple of fucking notches, okay? Yeah. You don't have to lose your mind about everything. Everything, okay? I get mad about stuff on social media too. I point out crazy things on social media too. But, we don't have to hate things so much. I mean, why? Why? I mean, sure, you can disagree with people, In politics, you can disagree with people about policy. You can point out why they're wrong. I point out why they're wrong constantly. I point out wrong policy endlessly, okay? But I don't say, and also the person who feels differently is the spawn of the devil, okay? Or that they're doing, like they're just evil and they should be damaged in some way. Don't do that. Social media, don't do that. Just take it down a notch. Yes, I'll be angry about bad decisions. I'll be angry about bad policy. I'll be angry about greedy foolishness, okay? But I'm not going to say that literally everybody who thinks differently than me is evil.
Yeah.
Okay? Except for the racists, except for the misogynists.
No, you're evil.
You're evil. Don't do that. That's just evil. You know, everybody knows today. Everybody has seen enough, heard enough to know you don't have to. You know that you're racist, okay? Yeah. You know that you're misogynist. You don't have to hate women. And if you do, there's something wrong with you, okay? That's it. It's just, and you don't have to be homophobic. We've been dealing with this for 30 years, okay? Don't goddamn do it. Don't do any of those things, okay? Now, you can have an opinion, okay? But not about hateful things. You can be against a policy. If you want to, like, I said something about bike lanes the other day, and like bikers wanted to burn me at the stake. Okay, like bikes. I mean, seriously, there's like bike fanatics. I mean, like what? Yes. Oh my God!
A whole culture.
We have to ban the cars from everywhere. We have to bring the end to cars. Well, if they're electronic vehicles, then there's no pollution. It doesn't fucking matter. It doesn't matter. We hate cars. Like we should all be on a bike. Like I can't be on a fucking bike. I'm 66. I weigh 320 pounds. I cannot go on a bike. Okay. Well, then you should change. No, I don't want to change. Okay. I don't want to be on a bike. I don't want to change my life. I don't want to start biking in the winter. Like. Holy shit. Like, I mean, no, don't be mad about everything. Just be mad about the right things. The bike people, the bike people. The bike people are the wildest fanatics on earth.
Soon.
Oh my God. Yeah, there'd be like a bike protest out in front of their fucking office soon. Okay.
Don't give the address.
What a world. Like mad about bikes. Okay. Like, oh my God. I think the bike lanes may be excessive. We're going to kill you. Okay. We're going to kill you. We're going to murder you, you fat fuck. Okay. Like what? Oh, man.
What the actual fuck?
What the actual fuck? All right. Next week, folks. See you later.
Ciao, ciao.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.